Today is the weekly watch list for the week of February the 1st. Tonight is January 31st, Sunday, 7:30 p.m. and we will get started. So first of all, the market rallied insane on Friday. So I know the bears were loving that. That was a really good rally, man. Really good. So right here you can see I have up the SPX chart. One thing before I do that. This is a chart that I like to use. Disregard Google over here. This is a chart that I use when I'm watching my futures. And something that has been alerted to me is I'm starting to watch the NKD. Okay, and lots of times the markets follow that one. But I also want you to see what's happening with crude right now. When the market opened, so this is the rollover line for Sunday. When the market opened, it shot up. Crude hit what, 34.18. We'll just say 34.20. And now crude is all the way back down to 33.48. So it's already 60 cents off of its highs. So watch that darn crude. In the beginning, I would always tell people watch crude to see what the markets do. But I have noticed in the last few trading days that correlation is starting to fade a little bit, in which me personally, I would be very happy when that correlation doesn't exist anymore. I want crude to do its own thing, and I want the markets to do their own thing. For a futures trader, it doesn't help if they both move the same direction. Okay. Before, when I played oil, sometimes when the indices are consolidating, crude is making a move. So anyway, that's a chart that I use. I'll explain the NKD more in chat, but that's the Nikkei. Yeah. So just watch that, and I'll get back on that later. Okay. So back to the SPY chart, and I'm going to be reading my notes and time stamping for YouTube purposes as well. So with SPY, if we were to go green tomorrow, my next target is this 50% retracement, which is also a resistance level. Okay, so let's just call that 194.50. If you were to break 194.50, my next target would be 195.50, somewhere right along in there, which is also a moving average. So that would be my range if we were to push back up. If we were to come back down, I'd be looking at like the 191 level, somewhere in there. I don't think we're going to give up the 400 points that we gained on that the Dow gained on Friday. But if it does pull back, I always like to use that 50% rule, especially on big days like this. If we do pull back, look for this candle to pull back 50%. Okay. So with that said, so we'll say 194 from 190. Look for that to pull back to maybe 192. Okay. Somewhere along the way in the day, if we were to go red. But that's just how I personally do things, and it actually works pretty well. So anyway, that is SPY. Next, SPX. I always like to go over the indices first. Now, really take a look at this. This is a trend line. Boom. Okay, so that trend line went right through there. Now we're going to get through this. Now look where this trend line goes again. Touches there, touches there. Okay, I'm going to let that trend line just keep right on rolling. So now look what you have. My target on the SPX would be for that thing to come on up, hit that 50% retracement or that trend line. Okay, so in my notes, I want to see how it reacts at that trend line if we are to push up or open green tomorrow morning. Okay, the futures will tell the story, but I want to see SPX push on up into here because it's pretty much almost at resistance. So closed at 1940, 1940.24. I'd be looking for this. Yeah, that's it. That's 1940. So I'd say I'd be looking for 1950. You get above 1950. For me, the next stop with Fib work, because we just had all these down days, the next stop for Fib work would be the 618, which would be basically another 30 points. Okay, I don't think it'll move that much, especially after this day on Friday, I do expect a small pullback. But short-term target would be the 1950. Okay. Otherwise, if the market does go red tomorrow, I'd be looking for about a 50% retrace of that candle. So, yeah, I'd be looking for a retrace back to 1915, which would be this fib line. 1915 and 1920 would be my targets on a retrace if we give up some of those gains from Friday. Okay, that is SPX. The NQ, NASDAQ futures. So the NASDAQ futures are already coming down just a little bit. So as you can see right here, down almost 6 points, which that's nothing. I call that flat. That doesn't mean anything right now. Targets in my notes. I have 42. If we pull back, if we push, if we push, I have us pushing to 4,300, which is where I'd like to see us come to, right in here. If you break 4,300, I'm looking at 43.41, which is this 50% retracement line right here. Once again, if this thing was to pull back, I'd like for it to give up about 50% of that candle right there. Okay, maybe pull back to the 8 EMA, which is your green line right here. 8 EMA, 42.14. Okay, so those are my targets on the NASDAQ futures. And the last one, ES. If ES pulls back, okay, you can see ES and NASDAQ look about the same. It's currently down just 3 points, so still flat. If it were to push, I'd be looking for 1940, then 1950. 1940 is this 50% retracement right here, but also it's the only real resistance I kind of see right in there anyway. Next target after that would be 1950, okay, which would be just a little bit right there at that moving average, which is the fib-based moving average, 821.30. That's the 34 EMA. Okay. You get past that mark, then 1971. I actually think we're gonna pull back just a little bit, even if we are continuing in a bullish. You know, if the trend has reversed in the short term, I still feel like we're gonna have a short pullback tomorrow. But like I said, just watch the futures in the morning, and that'll let you know, or give you a good idea at least. All right. I'm just going to go down my list on the charts, okay? This has been an epic short, but I'm going to say something. So Netflix looks ugly on the weekly and on the daily, okay? Somebody wrote in chat, if we don't pull back, this move isn't healthy. I would have to agree with that. I do think if we're going to continue a bullish trend to go up 400 points like that in one day, we need to pull back a little bit and then shoot higher. Also, with that said, we've got Google earnings coming up. I think tomorrow. Yeah, tomorrow after the bell. But I'll go over that in just a second. But yeah, I do think that we do need to have a little bit of a pullback and then shoot higher if we're going to change that trend and you know, get a short-term bullish trend going. Netflix, look at this. Got a doji candle right here. Now Netflix didn't participate in the rally on Friday, okay? It was still down $2.50, okay? That's a doji candle right there. That thing was going up and down. You could say that that might be, when I see that like that, and knowing Netflix and how it can just do whatever it wants to, I wouldn't be surprised if the market pulled back tomorrow and Netflix busts a $5, $6, $7 move, okay? Because it's beat down. It's beat down hard. I'm going to show you something else. See this right here? Netflix filled that gap. You had another little gap right in here. Netflix filled that gap. The only other gap left is this one right here where I have this arrow. Okay. Now, in my notes I have over under 90. If Netflix pulls down to 90, watch it for a bounce. Yeah, which is what's the low? The low on Friday for Netflix was 90.63. Okay, it closed at 91.84. So I'm telling you now, if Netflix decides to pull, watch the lower day from Friday. If you break 90.63, then it looks like Netflix wants to even head lower. If Netflix does break the lower day on Friday of 90.63 and then breaks 90, well, then in my view, 87 is next. Okay, 87 is next, and then if it hits 87, it might just go ahead and fill this gap right here. Okay, let me see if I can blow that up just a little bit more for you. So that's your gap right there. Sorry. Yeah, that's the gap I was talking about. Okay, so that's my take on Netflix. I'll blow that up just a little bit more for you. Okay, see, that's the doji candle right there. Now here's the deal. My MACD down here acts like it wants to really curl up just a little bit. So Netflix is on my radar hard and heavy tomorrow. I think this one busts a move. I would love to see this thing just, really make a move one way or the other. I don't want it to just be sideways. Okay, so that's my take on Netflix. All right, chart request that I had. Shop. Now, Shop has earnings, according to Thinkorswim, has earnings on the 17th. Okay. Now, you can call this right here a little bit of a flag pattern. All right. The person that requested this, I'm looking at the volume. I would assume that's on a swing. I personally don't day trade stocks that have that 500,000 volume. I like for them to have at least a milli, and then I go in and look at the options chain as well, because that helps me get in and out on a day trade. Now, if I'm swing trading the options, I don't really care. It can be 250,000, and it doesn't matter for me. But with this said, on this one, I gotta wait and see what it does. Does it break out of this? So this will be considered your pole right here, okay? And this would be somewhat your little flag or consolidation pattern. I would have to wait for it to break up or break down, okay? Looking at the overall trend, okay, it's been, you can see that it's been downtrending. So I'm just going to for you, okay? So you can kind of see the trend, all right? Now, that just showed me something right there. I'll make this way you can see it a little bit better. Let me blow up just this part. So, as you can see, with this downtrend, okay, it's almost right at that trend line, okay? So for me to be bullish on this, it has to break up above this before I go long, okay? And it needs to do it with some conviction. Considering the overall trend, and it starts to pull a little bit, and especially if the market pulls, then you have more risk to the downside than you do for reward to the upside. That's just my take, okay? And I like to play these type of patterns. When they're downtrending like that, I wait for the bounces to hit, that second or third EMA, which is 21 EMA or the 34. When they hit that, that's when I go short again, okay? But I would have to say, for me, short term, I'm more bearish unless it can break out of this consolidation pattern and get above that trend line, okay? The trend is your friend until it breaks and doesn't work anymore, okay? So that's my take on Shop. FRT, but I think I wrote in my notes I didn't really like that one. Okay, I know why I don't like FRT. Yeah, earnings are on the 9th. I will say this, you're gonna see me start posting a lot more on the patterns, because chart patterns trump indicators all day long. Okay, indicators just help confirm where the chart is going. So this is what is called a rising wedge. It just keeps rising, but when it breaks down, it usually breaks violently. Okay, so as you can see how wide it is right here, and now it's getting tighter and tighter and tighter. Sooner or later it's going to do something. It's either going to break up or it's going to break down. But a rising wedge, you normally wait for it to break down because it makes a very nice move. A little hard for me to buy right here because it's in the middle. When you see these channels like this, I either buy them at the bottom of the channel or I short them at the top of the channel. Okay, unless some other news is coming out. But just looking at the chart without any news, without any earnings, it's a little hard for me to do anything right here. This is how you just get chopped up or beat up from the beginning. But I will say this, I just noticed something else. Every time I hit these charts even more, I see something else. See that? Especially with, and you could even call that an 8 triangle. Okay, so there's your resistance. It's trending up right here. It may be banging its head and ready to pull back. Okay, but this, yeah, and see from right there, that's what, 150, we'll call that 151. Well, yeah, you still could have a pretty decent move. You could get, you know, $3. But for me, that's just, I don't know. I saw this pattern, but I don't like my risk reward on that one. It needs to be at the top of it or it needs to be at the bottom of it. So that was FRT. Alright, the next one, Kroger. So I had Kroger on watch, as you can see when I have these other channel lines drawn in here. Kroger was in the channel for a long time. Okay, and these are pretty easy to play because you can buy them up here. Buy them down here, sell them up here, vice versa. But even right here, your options just would have decayed unless you had a spread or something. Just not worth trading. But now you have another rising wedge. Now the thing I like about Kroger is these are the types that I like depending on the market, because if the market was to push higher, I like Kroger to keep on pushing. It has enough room to go. You're at the bottom of that channel, and it's held at the bottom of that channel, so I like for and Kroger will do its own thing regardless of the market. Sometimes it's not, you know, this is one of your old blue chips. It's not going anywhere, so it's still gonna do its thing. But I actually like Kroger to the upside, okay, because it's still in this rising wedge. Let me do something. So look at the long-term trend. That's a 3 year weekly of Kroger. Okay, look at that trend. I mean, even in all that volatility that we've had, it's still staying intact. So as you can see, you have a green candle right there for last week. So I actually like this thing to push a little higher, kind of regardless of the market. Okay, so that's my take on Kroger. The next one, Dollar General. Well, this is good for you. Okay, so I already have the weekly up, but you can see once again rising wedge of Dollar General. I'm going to take this back to the daily. As you can see, it's right there at the top of it. I mean, drawing your trend lines, and lots of times you can draw more than, you know, one. Sometimes I'll draw like a rising wedge, and then I'll see support and resistance, which will actually show me a triangle in there, so it kind of helps my head. Now, here's the deal with Dollar General. I really like this stock as a longer term play, but it's at the top of this channel. Also, my MACD indicator down here, which is a very, very fast MACD, is getting ready to curl back down. So any little market pull, this one is a prime candidate, because if the market pulls, it's at the top of the channel. I like for it to come on back down, okay, with the market. So that's one of my main plays this week, is really watching Dollar General. Okay, so it's at the top of his channel. Watch for that to break out in a green market or pull back just a little bit in a down market. Okay, Alright, next, XLNX. And I do try to give tickers from different sectors, meaning I don't like to have all tech tickers, because if that sector is moving one way or that sector goes bust for the week, I just don't like to have it like that. I'm gonna back this one up. So I backed this one up to a weekly. Sometimes you need to go out to a weekly or a monthly to really see. And I'll be back swing trading. I'm gonna give the market another week, maybe 2 weeks, and then I'll be back swing trading and calling a lot of plays. I still swing trade a little bit now, but because of the volatility, I've been holding back until we get like some market direction. Okay. You can see this clear channel right here. Okay. Once again, this is slightly a rising wedge just because the channel is tilted to the upside. Alright. This one, tell you the truth, in a green market, I like this one to push even higher. Okay. But if you take the weekly chart, you're almost at resistance of that trend line, so it may pull back. But then again, if you look down here, MACD is shooting up. Okay. So I'm going to take this back down to the daily. Same thing on the daily, and I kind of got ahead of myself. This one has done really good since its earnings. I didn't pay attention to that when I had the weekly chart up. So did very good on its earnings. It was way down here, boom, popped up, and boom, it's just kept on going. So with that said, we're at 50.27. If this thing can make a push to 50.72 and then break it, I mean, man, you don't have any more resistance for a while. I'm gonna back that up to the weekly. Remember what I said. You're at 50.27, 50.72 is that high that needs to be broken. You break 50.72, what other resistance do you see? Nothing. Okay? Not till you get back up here at this 3-year high of 55.58. Okay? So this one you should really keep on your radar if you're swinging, and also maybe even wait for a pullback to try and swing this one long. I really like this one long. Alright, so that's XLNX. They did very good on their earnings. Like this one to push higher if it gets above that 50.72. No more resistance till 55.59. I really love those charts for swing trading especially. Alright. This one, oh my gosh. This thing off the bottom since earnings just went absolute nuts. And then so this is Verizon. And then when Sprint beat, it just kept on going. Okay. I played this right here. I played it round 1. I made a nice little profit. I played it round 2, and I got my ass handed to me because I didn't sell it when I should have. So I took a nice little loss on it. But that happens, and you learn from those mistakes. With that said, this thing has been just parabolic, okay, in relation to its other moves. Your resistance is right here at 50.86, which is, I think, is an all-time high, but I would have to go back to a multi-year chart. But at least in the short term, no, I take that back. In the 3-year weekly, the high is 54.31, and this one is 50.80, somewhere in there. So yeah, it's still got plenty of room to go. But that's Verizon. Alright. I'm looking for Verizon to go ahead and push up here, which is about another $1 move, and then I hope it bangs its head and comes on back down. That's what I'll be watching for on this one. So keep that one on your radar. When you have this many tickers and you're looking for your plays, this is when you set your alerts. If you don't know how to set alerts in your platforms, you need to do it. For those of you at TOS, I'm going to show you right now. Right click, create alert. At or above, I'm going to type in 50.86. So at or, you know what, I don't want that. I'm gonna set it a little bit lower so that it triggers and it gets my attention. So I'm gonna set that alert at say 5070 just for the heck of it. So you can do at or above. You do that. You can do marks right here because I can do mine with studies. I have some of mine set for stochastics. If it gets certain spot, I really like the stochastics. But anyway, that's for another day. If you have a question about that, just shoot me an email or something, or ask me in chat, and I'll show you what I'm talking about with that. But anyway, you set your alert. Boom, create it. So if it gets up there, I know that when my alert goes up on my platform, I start watching it. Sometimes I just on the screen so that I don't have to go back and like, why did I have that alerted? Boom, I have it alerted because if it gets up here and it doesn't crack that resistance, then I'm going to get short. All right, so that helps when you have a lot of tickers out there. That way you always have something that you can play if you have a bunch of tickers in there. Okay, so that's Verizon. Next is ROST, which is ROST stores. I don't know if any of y'all shopped there. I've shopped there before, but anyway. So, and TJX, which is TJ Maxx, has a very good chart just like this almost as well. I'll flash it, but I'm not really going to review it. Let me do. So there's your resistance on the daily for ROST. There's some retailers reporting earnings this week. Okay, I'm almost positive if some of them have bad earnings, the retail sector, they like to follow each other. If somebody like, I think Walmart has earnings this week. Let me check. I'll come right back to ROST. No, they don't. No, that's on the 18th. No, not TJ Maxx either. Okay, anyway, back to what I was saying. When some of the big retailers miss earnings, the others follow. Okay? So, with that said, ROST just shot out the gate on Friday. So I want to see what it does with this resistance. Does it bang its head and come on back down? Okay, because this, I mean, I like the risk reward if it comes back down. So I'm really watching to see what that one does at resistance. Okay, so this one's on my radar tomorrow. Watch for the resistance. Sorry, I'm just adding notes, guys. Alright, so that's ROST. You get more reward if it bangs its head right there. They might even, you know, it might peek through. A lot of times they do that. That's algos. They'll let it go ahead and pop up, you know, say to 57. Then everybody gets long and boom, they drop it back down. So just because it like breaks it, make sure it's a good clean break and that break holds. Me, I like to anticipate breaks sometimes, but with the retailers, I'm not anticipating a break. I'm anticipating this thing banging its head and coming on back down because the market's been ripping for a few days, and if the market pulls back, this is coming with it. All right, that's my take on ROST. The next one, Foot Locker. This one's on my radar for tomorrow. Okay, the reason being, you got a doji candle right here. I already have the trend line drawn for the resistance. This MACD down here is getting ready to curl back down. Okay, and the main thing, and the thing was only up 25 cents on a 400 point day in the Dow. So I love to find those type of candidates that they don't participate in the rally, because when the market goes the opposite way, these stocks usually are a good play. So since Foot Locker didn't participate in the rally, in my view, on Friday, it was only up 25 cents, and you have a doji candle. If the market pulls and this one starts to pull too, it should be a very good play. Okay, but you're right here at resistance. Now with that doji candle, man, this thing could just fly tomorrow. So watch the market open, see how it reacts, see what it does right here at this resistance level. If it has trouble, I'm looking to get short. Okay, that's my take on Foot Locker. Next is, ticker request, YHOO. A little hard for me here with YHOO. When stocks have earnings, I don't mess with them. The only time I mess with them if they have earnings is if they're in a long-term portfolio. Then, you know, if I'm, you know, if I'm bullish on the stock long term, then I buy some on the dips. But this thing has earnings, what, Tuesday? Yeah, tomorrow's the first. This thing has earnings after the bell on Tuesday. I can't mess with something that has earnings that close. I usually wait till the earnings are over before I mess with it. Now, to speak about the stock, they don't like Melissa Myers. There is the talk of the spinoffs and stuff like that that was supposed to be good news for the stock. You basically had the stock come hit support here and here, and the expected move on the stock is, because I went to the options chain and looked, the expected move on the stock is $2.32. Well, $2.32 from 29.51 is that support right there, almost exact. Okay, 27.20. So if they miss earnings, I'd be looking for that 27.20 to hold. Of course, if they beat top and bottom on earnings, then look for this thing to reverse and really hold this nice support right through here. You got good support. Sorry, darn. You got support here, and you got support here. Okay, so if you beat earnings, I don't look for it to come down here. If you miss earnings, I'm looking for it to come down and test this area right here. Okay, and when something's already a dog, the market loves to sell off on a dog. Trust me. Okay, so you got a nice downtrend here. You came on up, you came back down. So we're kind of like in no man's land right here until earnings. So that's my take on YHOO. I've got 3 more tickers, actually 4. I'll be quick on these. If you need an oil play intraday, Exxon. This one's a good one too, because oil has just been ripping, and I'm looking for oil to pull back. I've got a channel right here, and this is a descending wedge, okay, which when it reverses and breaks to the upside, it's strong, okay, kind of like what you had sort of right through here, but that's not a good example. Okay, so you're in the channel, you're right at this trend line. If oil pulls, I'm looking for this thing to pull, but there's one problem. Earnings Tuesday before the market. I'm telling you right now, I expect Exxon to beat earnings. I'm gonna be looking at their options activity the last 30 minutes on tomorrow. I'll be looking at the options activity. Let me make a note of that. Options activity. On Exxon. Exxon beats, you're gonna see a very strong reversal. That now they got to beat top and bottom. They can't beat on just earnings per share and miss like revenue estimates. They got to beat both. They beat both. That's gonna send this thing right out of this channel. Okay, it's going to be a reversal of the downtrend of the channel, and if the price of oil continues to rise in the near term, you're going to see this thing just push on back up here and test these highs right here. That's why I keep telling folks about oil. It's not going to stay beat down forever. I do feel like it's going to come back up, but that's just my take. Doesn't mean anything. So watch that channel. Watch for it to break out. If they beat earnings, they report Tuesday morning before the bell. CVS. Been a good turd. Okay, this is a descending triangle. Okay, you got a trend line coming down like this. You got support right here. CVS needs to break out or come on back down. I was very surprised that it did this right here, but when you look back at the chart, it was at support on Thursday. Okay, so it was bound to have a green day on Friday. Okay, unless the market tanked. So you want to watch to see if this breaks above that trend line or if it breaks down. But right here on a market pullback, this could make a good 1 or 2 day trade. All right, and I do find let me see earnings right here. So sold off 2 days before. Two red days before. No, I didn't know about this one, but right here, I would expect this one. I would expect a little bit of profit taking for those who want to get out of it before earnings and not hold through earnings. So you might catch, a nice swing for a day or two on this one. That's CVS. Last chart I forgot, unless somebody else has a request, is IBM. Now, remember I was talking to you guys about IBM and a buyback, stock buyback. IBM has a downtrend, but now I want you to look at something. See this gap right here? IBM never filled it. See this gap right here? I don't think IBM can fill it. That's just me, based on past history. Now, if it does fill it, that's even better, because I would love for IBM to keep on bouncing, maybe come back up here to this 21 EMA, and then resume its downtrend. Okay? But even right here, I mean, to me, that's, pretty much some resistance right there. It's sitting at resistance. I actually like IBM to come on back down. So, if you like, IBM, has volume, plenty of options volume. I played this one quite a bit. It doesn't do crazy spikes like Netflix and some of the other stocks will do. When she goes, she goes. When she fades, she fades. Okay, so it's a good day trade stock. So if IBM can't get over this 125 and has problems, then I'm looking to get short that thing. But I would like to see IBM try to fill some of this gap and then continue its trend back down. Okay, but you can see it's come up in here to this 21 and 34. Bam, it's come right back down. Touch the 21. Now, the 21 and all of those EMAs got together right there. Consolidation, down. Consolidate, down. When I say consolidate, I'm talking about the EMAs. Squeezing together tight. And then, boom, it just opened up. So right now, I feel like it's time for it to push a little bit more, which would be nice, and then get short for a swing. Whew, that was a lot. Any questions, guys? I hope you learned something on the, try to recognize your patterns. I will say this, some of your best patterns out there that you need to know, and it's really only, really like 3. So you need to know your wedges, okay? Rising wedge, descending wedge. You need to know your triangles, symmetrical, descending, ascending. And you need to know head and shoulders and inverse head and shoulders. Okay, head and shoulders, when it breaks, that's bearish. Inverse head and shoulders, when it breaks up to the upside, that's bullish. Best place to go to study some of your charts is stockcharts.com, and on their homepage you will see a link for Chart School, and you can just you can go in there and just type in doji. You can type in head and shoulders, and it will index it, and you can see all the different posts on that. And you can see the stock charts post themselves, and also other people who have posted charts and stuff as well. So that's actually how I learned my charts. I actually have a binder where I was at work and I printed out probably like 50-60 pages on their charts, and I keep that in a binder. And sometimes when I'm sitting down, drinking a beer, watching football or something, and it's commercial on, I'll pull out that chart because it's sitting at my coffee table, man, and I'll just look at a couple of charts, to keep that stuff fresh in my head. But I do find that chart patterns trump everything. So if no questions, guys, I'm out of here. This will be uploaded to Kevin's channel with timestamps on it. So see you in chat tomorrow. Good luck. Have a good night. Be safe. Happy trading tomorrow. Peace.